I've discovered a way to predict the markets. You know your charts speak to you? That's right, the immediate past actually predicts the immediate future. You know who taught me that? Top trend researcher Charles Lindsay. He wrote a book on those theories back in the early 90s called A Trident Strategy. There he presented some formulas that actually predicted the next action move in a market. When markets trend, we can make a lot of money trading. Charles Lindsay taught us that for every action there's a reaction and then there's a subsequent action. And the subsequent action, it mirrors the first action. So it's very tradable. Take a look at this chart right here. You have an action move down, a reaction move, it's about 1/3 to 2/3 of the action, and then a subsequent action move down, which tends to mirror the first action. It's this second action move here that's very predictable and tradable. In a moment, I'm going to share with you a great little tool that I created that actually calculates a trade for you. It gives you the entry, the targets, the stops, when to move your stop to break even, and how to trail as the trade progresses. Best of all, I'm going to give this to you free. Let's take a look at a few examples. The tool that I want to give you is called the Dynamic Profit Generator. As we look through the examples, we're going to use the tool to see if we can predict what the price action is going to do next. And I think that you will soon see how the immediate past does predict the immediate future, and more importantly, how you can profit from it. Needless to say that practice makes perfect, and sometimes you're going to see smaller action-reaction dynamics inside of larger ones. We're going to focus on the larger ones for now. Let's take a look at the right edge of this chart. It looks to me like we have an action move coming from this point up to here, and a reaction move coming down to about here. Now, how could we predict the next action move, and how might we be able to trade it? Let me introduce to you now the Dynamic Profit Generator. This little tool can sit right on your desktop. It comes with 3 tabs, and you can set them up for any market you want. You're going to put the value per point. For the pound dollar, we're going to consider a full point to be worth $62,500, and then you have to tell it the size of the smallest move. We're going to ignore the 5th digit, so I put 0.0001. So it's very customizable. It's really simple. We want to take the beginning of this action move, and we'll take the low point. So by clicking on the bar, we can get the low, 1.5971. And we'll just type it right in here, 1.5971. We'll put our long trades on the bottom section, and for short trades we'll use the top section. Now for the price number 2, all we need to do is put the highest point of the action move. So again, we click on the bar, 1.6427, and we type that in. 1.6427. Now the tricky part is determining when the reaction move ends. So we're looking at something that's about 1/3 to 2/3. Now it's possible you might have thought, when this was at the right edge of the chart, you might have thought that this might be the end of the reaction move. So we have to use maybe other indicators to help us identify the highest likelihood of that reaction move ending. When you get the DPG, you're also going to get complete training on how to use it, and some ideas are covered within that training. We're going to use this point as the end of our reaction move, and that is a low of 1.6165. So we'll type that into price 3, 1.6165. Notice that as soon as we put that in, over here on the right we get our entire trade calculated for us. We have an entry, we have a target, we have a stop, we even have a level where we're going to manage our trade and move it to break even, and it also tells us how much we have to risk versus how much we stand to profit if we make our full target. And you'll notice that it's approximately 1 to 3. So we're trying to get to 1.6621. Let's see what happens. And we get pretty close. We get to 6600, and notice that it does spike up to 6621 and beyond. See the action, reaction, subsequent action. Notice that there's other smaller action, reaction, subsequent action moves inside of that trade. You could even consider that perhaps from here to here is an action. You could put those numbers into the DPG, followed by this 3rd number, and it gives you a trade within a trade. It's a very powerful tool. With a little practice, you'll be able to perfect it. Let's take a look at this S&P E-mini chart. This is a 5-minute day trade chart. Notice the big action move from here straight down to here. We can put these numbers in as price 1 and price 2 into the DPG. First, let's set up tab 3. All we have to do is type in the symbol, the dollar per point, which is $50, and the minimum tick, the minimum price movement, which is 1/4 of a point. Next, we just put in the high price here, 1201.5. Bottom of the move down here, 1186, and then what appears to be the end of a reaction move up here, 1191.25. Notice that we have an entry price of 1187 and a third. We're going to round that down. Let's go ahead and take a horizontal line and mark our entry at 1187.25. Alright, I put the line there and labeled it in blue. So if it comes down and hits the entry, that is additional confirmation that the subsequent action move is now underway. Our target is at 1175.75. Let's go ahead and put a line to mark that as well. It really helps to put horizontal lines to show the trade so that you can see the breadth of the entire trade. You could actually see its entire profile. Notice the 1 to 3 risk-reward ratio. You're risking this much with the potential of making this much. Remember, action, reaction sets up the immediate future, which could be a subsequent action, tends to mirror that first action. Let's see what happens. Okay, see what happened as the next bar printed? It actually made a new high on the reaction. So we need to change our number in the DPG. That happened before the price came down. So let's make sure we get the right number in there for our price number 3, 1191.75, and that does make an important difference. We have to get those numbers right. Okay, so now our trade setup has changed a little bit. I'm going to go ahead and move our lines to reflect that change. So now we see our entry. We're going to round that down, 1187.75. The target, 1176.25 down here, and then the stop at 1192. We still have that beautiful risk-reward ratio, and notice that the price did come down and it triggered in the trade. And before I continue, I also want to pay attention to our break-even level, which is at 1184. Let me mark that one as well. Okay, I always use the same colors with my lines. Yellow is for caution, usually a take action level. So if the price gets down to here, we'll move our stop down to break even. And notice that the price does push through, and so we're going to take our stop, we're going to move it down to break even, and the price does stab all the way down, getting pretty close to full target. So when we get about 3/4 of the way, we're going to use the final piece of trade management that the DPG provides for, and it's called the differential, and we're going to trail the price by 1.5. We're going to round it up. So when it comes down here and it gets as low as 1177.5, we're going to go ahead and push our stop down to 1179, and that's where the trade's going to stop out. So this one almost gets to the full target, not quite, but we were able to get to a risk-free position and then protect our profits when we got close to our full target. I want to thank you for your time and letting me share with you one of my favorite trade tools. Best of all, I'm going to give it to you free. Just type in the URL www.netpix.com/free software and I'll send it to you right away. Thanks for joining me on this video, everybody. This is TJ with netpix.com, and may the DPG generate profits for you as it's done for me.